I'm Surinder Singh. I'm the MD responsible for transformation and change and disruption within Barclays and Barclays, and both for the United States and the United Kingdom. When I came into this role, and I've been actually talking to our CEO about our processes and how archaic they are, given Barclays has been in the UK for about 50 years now. And I don't think anybody has ever looked at, the processes and how they kind of, grew over time. When we looked at the process, we were getting, roughly about, 3 million applications in Barclays Card, from a consumer standpoint per year. There were massive handoffs, massive breaks in the process, no kind of, straight through automated process, significant, again, burdensome controls, that had been overlaid. And the customer was actually getting very frustrated along the process, where the cycle time was, the best case was 7 days, and in the worst case, it was probably close to, 2 months. And think about, you trying to get a card or trying to buy a car, and it takes you 2 months to get the loan. You by that time have gone somewhere else, so we were losing business. So there are really three main goals. The one goal is actually, if you think about onboarding as a journey, it is the first time a customer actually experiences the company. And so the first thing we're trying to do is to actually make sure that that onboarding journey of the customer is very, very fruitful and very, very kind of positive experience for the customer. The second thing, as I pointed out, is our CEO wanted to make sure that we had not only optimized the controls in the processes or in this particular process, but we also had automated the controls. And if you again think about the onboarding journey, it is largely, because we're regulated, it is largely a control process. We have to worry about, fraud, we have to worry about anti-money laundering, we have to worry about credit, whether the customer will actually pay us back. It's really got a lot of risk elements in it, so we wanted to make sure that, the controls are embedded and automated in the process. And then I think the third piece was really going to be an outcome of those two things, which is if we have actually provided a great customer experience straight through and automated the controls, then we would definitely get two outcomes out of it. One is a much higher revenue because we would get better conversions. And the second piece would be a much lower cost because we would have, fewer handoffs. There are a bunch of things we're looking at. Robotics is one of them, machine learning is another one. How do you actually, do a business process orchestration, if you may, that goes step to step, so that's another one. But all of them are actually going to play a role, where needed. So for example, machine learning. Today we only use the credit bureau to approve a customer. I think machine learning would be very, very important because there are other elements of that customer that if we can actually leverage the power of the data in today's world. So, if you're on Facebook or LinkedIn or what are you twittering, then credit bureau just becomes another sensor, and you can actually make the approval process a lot richer and possibly approve more customers that you're turning down today. So machine learning and artificial intelligence can help us there. Robotics could help us where if today, there is a task being done by a human being and that task for some reason cannot be automated because a pair of eyes need to look at it or a pair of hands need to touch it. Again, you can add robotics there to just, move the process through. The way I look at it is, one is we're just going to get better customer engagement when consumers, get to know that we're actually fulfilling them in a very simple way, an instant way, and digital way, intuitive. If you have more conversions, less touch points, less handoffs, less people, the other outcome you're going to get is you're going to, number one, use these people for better things, and number two is you're going to reduce your cost base. But more importantly, I think as I described, we will know that the process is actually, we're in control because anytime if there's a break, the way we're designing it is that it'll actually throw up a red flag saying, hey, something in this process is not working, so we don't have to go dig into everything. We're just digging into exceptions and how do we then fix the root cause. So it'll be also a benefit of, what I call pace of change, and pace of fixing will become much faster because we would know exactly where the break is and what we need to do. So it's no different than a Toyota assembly line, and that's where the lean thing, as you may recall, started. If the assembly line is something is not working, we can actually stop the assembly line, fix it quickly, and get it going again.